In today's video, we're going to discuss how to combine JEPY with JEPY, which is the new Defiance ETF that should sport about a 30% dividend. We're going to discuss how to combine the two funds for superior investing results. So we earn over $100,000 per year in dividends at this channel, as you know. And my performance and value shows that I'm up 94% over the last 3 years. Okay, all the other indexes are up fractionally compared to that, a third of that. And also on a year-to-date basis, you can see that we're up 35% year-to-date, whereas the Nasdaq's up 26%. So on a 3-year basis, we're beating all the indexes. On a year-to-date basis, we're beating all the indexes handedly. And also on a daily basis, we were down 400 on Friday, but that's still 0.7%, which, as you can see above, beat all of the indexes. So we're beating all of the indexes, living financially free out of our brokerage accounts at this channel, and you can too. Email me for my e-guides at aikentodd48@gmail.com if you're interested in doing the same. When you buy my e-guides, you get free access to my phone number for life and the Discord chat room for life. So please keep that in mind. Okay, so let's go ahead and get into what JEPY is, okay? JEPY is, again, a fund that's supposed to aim for about a 30% dividend yield, and they sell put options on the S&P that expire in less than a day. So less than a day of DTE, and this helps it also limit some of the decay because they sell these puts at the end of the day, so that eliminates a lot of drift, a lot of decay by doing it that way, okay? They sell at the money puts, or sometimes they'll go in the money about 5% away from the current price, so that gives you some upside exposure if you're trying to participate in the upside as well as collect the dividend. All right, they have about a 1% management fee, which should be negated by the large 30% dividend. Okay, they also, kind of similar to YieldMax, they hold treasuries, short-term treasuries for extra yield. And they also have European-style options, so they won't get assigned if the market were to take a dive. They have favorable conditions to renegotiate their contracts. So that's the gist of JEPY, okay? Everyone knows what JEPY does, JEPI. Everyone knows about that fund. It's a crowd favorite. It has about a 10% dividend, and we've made plenty of videos about that in the past. So go check out our wall on JEPY if you want to learn more about that. But 30% dividend versus a 10% dividend, which one are you going to choose? Now, I've told you about the basics of JEPY, but let's actually discuss how to apply it in the real world, because you can go find other channels that can talk about JEPY till they're blue in the face and can probably explain it better than I can, but I'm not sure if they can show you how to trade with it and actually outperform the market with it so that you can live financially free through your brokerage account. Okay, so this is very important. It's not just we buy funds here, YieldMax funds, all these different ETFs that just sound sexy. We have to actually apply them into a cohesive strategy, okay, to actually get ahead in the market. Okay, so what's the first thing I worry about? I worry about 3 things. It's not a worry, but I think about 3 things when I'm investing in Defiance funds, okay? First, I want to look at the index nature of them, which JEPY is the index. And as you know here at this channel, for every $1 you put in your account, you get $4 of purchasing power, okay? Everyone has this power granted to them, okay? So I'm just using a fraction of my margin power, okay, which you can see down here below. I have about $180,000 in debt. This is a far cry from where we were. We were at about $250,000 in debt just about a month ago. We were up 50% in the markets. We were at $500,000 account value, and we were at $250,000 in debt. But as the market has pulled back, I've been taking profits, trying to lighten up exposure with YieldMax stocks because they fall harder than the indexes. Okay, and that's what JEPY is going to solve. Is JEPY is the index, so we should see a lot better correlation to the indexes and less drawdowns. But first, let's go look at a chart of the S&P 500, which is what JEPY tracks. Okay, so if we go to SPY, okay, you'll see that, and I made a video about this. The last video we made is how to survive the YieldMax storm, the coming storm in the market with YieldMax funds. So I already showed you this chart, but look, you can see we broke major support here, okay? The 100-day moving average, which is that purple line, okay? We broke that support, and we're heading to the 200, which is the all-important support area, the black line. So we're in no man's land. We're between the purple and the black, and we should see perhaps some more volatility in the markets next week because of this. But at least JEPY should see reduced volatility since it's the index and not a stock. Now, I don't know how these 1 day till expiration puts will work. So we need to see how that works. The jury is still out. Just like with yield max funds, we need to get a better track record for JEPY. So all I can tell you is that we're in no man's land right now for the indexes, and it bodes it. It's foreboding. It's an ominous sign when you see stocks in no man's land like this. And so I'd rather be in an index than the yield max stocks. And so JEPY has about a 30% yield. They're gonna have that. They say that's what they're aiming for, and that beats a lot of the stocks that yield max has. Yield max has Apple, Google, and those all have about 15 to 20% dividends. This should go for a 30% dividend. And it's indexed, and you have to go with indexes when you want to survive. So, the indexes aren't looking great. They're not looking too constructive on a technical basis here. And also check out Carbon in the Discord chat room. He could tell you more about these charts and what he's gleaning. Okay, his prowess with technical trading is much better than mine. Okay, so here we have the NASDAQ. We pulled back from the 50, we broke the blue line, and now we're holding the 100. So it looks similar to the S&P, except it's a different moving average that it's approaching. Okay, we've actually tagged that 100, whereas the S&P is still waiting to tag the 200. So we could see a follow through on this. We break the 100 just like the S&P, and hopefully the NASDAQ will bottom around the 200-day moving average, that black line. Okay, so maybe we have a few more percent down to go in the market of pain. But if you're in JEPY, it should be reduced pain compared to the yield max fund. So I made my switch. Okay, I've also taken a lot out from JEPI, JEPI, yes, and I've reduced that from 10,000 to 1,000. Here's JEPI here. We've reduced that to 1,000, and I've made JEPI 8,000. Okay, but I haven't gotten JEPI up to more than that because of this next problem. Okay, here's the next thing I worry about, and everyone knows this here at this channel. Okay, first I watch the chart. First, I always index my investments. Okay, if I'm using margin, I index them, so I see less surprises, less headline risk, and I get better correlation to an upward market. So I like index investing, and JEPI checks that box. However, the big thing is maintenance. So if we go to a trade tab here of JEPY, we go hit the trade button, okay, trade. We'll go look at the margin maintenance requirement. Now, this is very important because even if you're not trading on margin like me, sometimes you want to live financially free out of your brokerage account and you just want to withdraw out of it. Okay, you might not want to trade on margin again, but you want to withdraw out of your brokerage account. Well, you have to watch these 50% maintenance levels, okay? 50% is very high, okay, compared to my Cornerstone fund, which is 30%, which I'll talk about at the end of the video. 50% is still very high. That means for every $100,000 I put into JEPY, which many people would consider doing because it's an index and it has a nice dividend, for every $100,000 I put in, 50,000 of my equity is taken up. All right, now in yield max, that's the case with Tesla. It's 50% maintenance too. So if you put 100,000 in that, then 50,000 of your dollars are taken up. So that's important. And Tesla could drop like a rock. You never know how much that thing could fall because it's not the index. So the maintenance is very important, okay? Whether you're living on margin or not using margin, maintenance is the key to living financially free out of your brokerage account. If you need help understanding maintenance, that's in my margin e-guide. You can email me there anytime, okay? So 218,000 for withdrawal is the real number to watch, okay? 467,000 account value is just ego, okay? That means nothing. That can go up or down. It doesn't change your life. What changes your life is this available withdrawal number. That's how you can spend out of your account. Also, you have to be able to withstand a 20% market correction when you're using margin, okay? I use margin, as you know. Again, I already showed you that. So if you take a 20% correction in my account, okay, 467,000 account value plus, let's say, 200,000 in debt, let's just call it 700,000 total invested, okay? 10% of that, 70,000. 20% correction, that'd be 140,000. So we could go a 30% correction, and I'd be at 210,000, and I still wouldn't be in a margin call. When this number gets to zero, you're in a margin call. Or if it's close to zero, you can't withdraw from it, okay? So again, keep this number in mind. I can't stress it enough, okay? All you guys are like, well, I'm not using any margin, so I'm not worried about maintenance. Oh, again, you might want to check that out if you're trying to withdraw out of your brokerage account. Some people buy houses on margin because the margin rate is less than the mortgage rate. My margin rate is 6% because I negotiated it down. Okay, it doesn't show up on a credit check. You can click sell at any time. And this is what you call good debt, okay? So 6% interest, I don't mind holding this debt. And I don't mind, even if I wasn't having any margin interest at all, and if I had no debt, I would still be weary of this available withdrawal number. Okay, if I were to put all my money in yield max funds and JEPY funds, JEPY funds, then I would have half of my equity reduced, and that limits my freedom in life, okay? JEPI, as you guys know, is 30% maintenance. So you can buy a lot more of that fund and it not affect your available withdrawal. And it has about a 10% dividend. It's just not enough of a yield for me. That's why I've been getting out of JEPI, you call it JEPI, and I've been switching into yield max funds. But as those yield max funds have been getting, as they've been seeing extreme volatility as the market pulls back, I think it's better to stay with index funds like Cornerstone. This is where I index my portfolio to. Okay, Cornerstone and JEPI, I think, is a good candidate. JEPI, that's where a lot of people anchor their portfolios to, their yield max portfolios, and now these new Defiance ETFs. We're going to anchor our portfolios to JEPI or Cornerstone, but JEPI is not enough of a dividend. So I anchor to Cornerstone. And I have 500 grand in Cornerstone for this reason, because it has a 20% dividend. So it's indexed like JEPI, but it pays a 20% dividend. And also Cornerstone is 5 stars. Okay, if you look at a Morningstar chart, you see 5 stars, Cornerstone. So nothing beats Cornerstone. Look at the indexes, nothing beat it there. You have to factor in drips and dividends if you want to understand why the chart looks like this and it beats the indexes. Whereas if you go to a chart of Cornerstone on E-Trade, you'll see it goes down over time. That's like many closed-end funds, okay? Many closed-end funds decay and they give return of capital and they return some shares to you. And that just gives you tax-free benefits, okay? The only time ROC is bad for you is when the NAV is growing. But as I show you here on the Morningstar chart, look, the NAV is rising. Look, the NAV of Cornerstone is rising. Cornerstone is the blue tab. Look, the NAV is rising. So that means that the return of capital it gives you is just pure tax-free dividends, okay, until you sell. The other important thing about Cornerstone is that it drips its dividend at the NAV every month. So here's the market price of $8. Look, the NAV price is $6. For all you newcomers here, $6.49, 22% gain. $6.52 here, 22% gain. $6.42. Look, $6.27, 26% gain. All the thousands of dollars every month from both Cornerstone funds, CRF and CLM. CRF is the NASDAQ, CLM is the S&P. Okay, this is the greatest vehicle on earth. It gives you 30% premiums per year, look it up, and a 20% dividend, and it gives you those special drips, okay, and it gives you days gains potential, which we're up 300 on Cornerstone on Friday. Nothing much, but the market was down while Cornerstone was up. Always a promising sign there. Always nice to see that. So the key with Cornerstone is you just have to learn how to play the rights offering. Many closed-end funds have rights offerings, and so we alert you of the rights offering here in the Discord chat room, okay? In the Discord chat room, we have over 400 members here who are trying to live financially free out of their brokerage accounts as well. So they can share their unique experiences with you on not only on how they're playing the rights offering for Cornerstone, which is pretty standard. We're all playing it the same way. Especially those who bought my e-guides on Cornerstone. We've studied the e-guides. We've read Clint's messages on Seeking Alpha. We've all brought our strategies together in one place to talk about how to play Cornerstone best for the rights offering, because that's how you really load up and double up your money, okay? You get 30% premiums, but if you sell before the rights offering and buy back after, you get to pocket the 30% premium and reset your dividend yield. Okay, we also have a brokerage-specific section here where we talk about who has the best drip rate, who has the best drips for Cornerstone, but who has the best margin rates, who has the best maintenance requirements, because not every brokerage is the same. And most importantly, I have my daily portfolio recap channel here where I send my alerts of the portfolio every day, all my trades. I try to put them in a Discord every day so you can track my portfolio there when I'm not making videos on YouTube. So, okay, let's do a quick rundown once again. What is JEPY? 30% yield, sells puts on the S&P with about 1 day to go of expiration, so almost zero DTE, and they do it at the end of the day to eliminate a lot of decay that you might see from theta and volatility with options. They do it towards the end of the day to eliminate that decay. And they sell at the money puts, or sometimes they can go about 5% out in the money, and that gives you some upside exposure there. They sell short-term treasuries for yield. They own short-term treasuries for yield, and they have European style options which are favorable when assignment comes. So that's JEPY. I think it beats JEPY, but the only thing with JEPY that's unproven, and it has 50% maintenance, and you have to be wary of that when you're trying to live financially free out of your brokerage accounts. Okay, if you have any questions on what I'm doing with my account, email me again at akintodd48@gmail.com. When you buy my e-guides, I have 4 e-guides. E-guides on Volume 1 is fundamental analysis. Volume 2 is technical analysis. Volume 3 is how to live financially free out of your brokerage account using the power of margin. And Volume 4 is how to play Cornerstone properly. Okay, when you buy all 4 of my e-guides, you get my phone number for free, and you get Discord access to the chat room for free for life. Okay, so when you email me, no need to ask if it's going to be a one-time charge or a monthly thing. It's for life. So I hope you liked the video, guys. Click like or subscribe if you did, and I'll talk to you soon. Thanks.